U.S. Treasury Secretary Scott Bessent says the missing piece in negotiations with the United States, China, is eventually coming to the table this weekend in what has been described as an unsustainable trade relationship sparked by higher tariffs, which requires some sort of de-escalation, at least initially, and possibly later a broader trade pact. Top US officials are set to meet with a high-level Chinese delegation this weekend in Switzerland in the first major talks between the two nations since the US administration announced stiff tariffs on imports. Bessent also yesterday said the US may want to decouple over what is seen as strategic industries like steel, medicines, computers, and strategic manufacturing, but not a complete decouple for less strategic products. Hello and welcome to Global Business Insights, where we look closer at headlines moving markets to equip viewers with perspectives to help them thrive in an increasingly peculiar business environment. On the agenda at the US-China-Swiss meeting could be the issue of computer chips trade. NVIDIA CEO Jensen Huang is calling for unrestricted flow of powerful artificial intelligence chips to countries like China, adding that free flow of chips would help bring back tax dollars to the US and create jobs. The US administration slapped restrictions on shipment of NVIDIA's H20 chips to China without a license, a move set to protect national security, but which also forces NVIDIA to take a $5.5 billion quarterly charge. Meanwhile, US stocks were down again yesterday as tariff tensions weighed on sentiment. Trump spoke of pharmaceutical import taxes due out in the next 2 weeks, and at a meeting with Canadian Prime Minister Mark Carney, he reiterated his desire to bring production of cars, steel, and aluminium to the US. Still, in the US trade deficit widened to a record high in March as businesses boosted imports of goods ahead of tariffs, which dragged gross domestic product into negative territory in the first quarter for the first time in 3 years. The trade deficit widened 14% to record $140.5 billion in March, and goods imports accelerated 5.4% to an all-time high of $346.8 billion. Imports from most countries were highest on record, but imports from China were, however, the lowest in 5 years and could drop further as hiked duties on Chinese goods could be a staggering 145%, depending on how negotiation goes. On trade deals, the US and Britain have made good progress in negotiating a trade deal that would likely include lower tariff quotas on steel and autos. But the timing of a deal remains in doubt amid conflicting signals. Still in the UK, the Bank of England is likely to cut UK interest rates by a quarter point to 4.25% tomorrow and signal further reductions to come as the uncertainty weighs on growth. The Bank of England's Monetary Policy Committee will announce its latest rates decision against a backdrop of mounting concern over the potential for US policy to derail the global economy. The US Federal Reserve, FOMC, is expected to keep their own key short-term interest rates unchanged later today. The UK and India have agreed a trade deal making it easier for UK firms to export whiskey, cars and other products to India and lower taxes on India's clothing and footwear exports. The British government said the landmark agreement did not include any change in immigration policy, including towards Indian students studying in the UK, adding that it boosts the sagging economy of the UK and delivers for British people and business. In Germany, a fragile coalition eventually led to Friedrich Merz emerging as Chancellor. He stands on a razor-thin parliamentary majority to deliver reform in Europe's largest economy at a time of political and economic turmoil. The message seems to be that he must become a unifying figure and find a way to usher a major change without being as polarizing as has been seen in the past. Gabon's leader, Brice Oligui Nguema, has named a new cabinet after his landslide victory in a presidential election in April, choosing a prominent banker and businessman to tackle the country's acute liquidity shortage. Henry Claude Oyema, the chief executive of Gabon-based BGFI Bank and head of the Gabonese Confederation of Businesses, was named to be Minister of State, Economy, Finance and Debt. Nigeria's Renaissance Africa Energy Company Limited says it has halted oil shipments via its Okodia-Rumuekwe pipeline in the coastal river state following a spill. The pipeline, which transports crude oil south to the Rumuekwe manifold for export via the Boni terminal, experienced the spill in the early hours of Monday in Ikata community in the Ahoada East district of the state. Nigeria has also approved a $652 million China Exim Bank funding package for construction of a road to move goods from a seaport and petroleum refinery on the edge of its main city, Lagos, to its southern states. The financing was approved by the Federal Executive Council, chaired by Bola Tinubu. That was also on Monday. Will the new focus made in Nigeria make a huge difference? Our deep dive is on a trend of a world that is renegotiating trade barriers and trade terms. Sometimes we see barriers going up, in some cases they are going down. In the UK, for example, in a deal with India, more barriers were dismantled, hopefully to support revival of a weak UK economy. But in Nigeria, the president is pushing Made in Nigeria as local industries will be getting priority in government spending. The president is set to sign an executive order that will direct government spending towards Nigerian-made goods and services, and there will be no imports unless a local option is truly unavailable. The goal is to boost homegrown industries and keep more of the country's $34.3 billion budget circulating within Nigeria. Europe has a similar strategy, making it clear that its huge defense additional spend will be administered in a way that favors European defense companies. US is also pushing to decouple from the rest of the world in what it has called strategic manufacturing sectors. Nigeria also needs to accelerate economic growth, as the outlook suggests there is need for fresh growth catalysts. Is this going to be one of those growth catalysts? The answer has to be perhaps yes, but certainly this policy needs to be supplemented with reform in other areas. There are three very important considerations. First, Nigeria needs to address the shortage of electricity with a war room approach. According to Power Minister Tunji Adelabu, a newly launched National Integrated Electricity Policy (NIEP), that is a comprehensive national roadmap aimed at transforming Nigeria's struggling power sector in line with global practices and the provisions of the Electricity Act 2023, will support an accelerated pace in terms of the momentum of improvements. The new policy framework will also integrate renewable energy adoption, energy efficiency measures, climate resilience, and we would also have improved regulatory oversight, setting the stage for a modern and inclusive power sector, and will also address the familiar gaps, which will include infrastructure deficit, lack of capital investment, regulatory bottlenecks, and monopoly structures. in distribution and generation. The policy also encourages the growth of state electricity markets and supports a decentralized but coordinated energy planning model, allowing subnational actors to play more active roles in electricity management. The focus, and rightly so, must be to enhance greater investor confidence, more efficient power delivery, and improved service quality across the country. Like I said, the key word has to be increasing momentum. Second, Nigeria needs to attract investment and needs a business environment that incentivizes infrastructure development. Investors do not like a protectionist environment, though they will understand the need for some measure of ensuring you get better value added locally. A strategic upgrade of local operations is also needed by beefing up local skills and supporting local capacity expansion. That could be supported by directed funding and more institutional support. A new emphasis on attracting investments in strategic sectors is certainly key. Third, we need to understand that there are industries we cannot just keep acknowledging that there will be major gaps in local capacity. There has to be a deliberate plan to attract investment to build this capacity in the medium, maybe long term in some cases. Call this a strategic local manufacturing initiative. In sectors like essential manufacturing, I would say things like shipbuilding, car manufacturing, computer components and chips, defense equipment, and in the new digital technology space. Nigeria needs generous incentives to attract the big players who are able to move fast in these sectors and take advantage of the size of the Nigerian market and get Nigeria more entrenched in the value chain in these strategic areas. Again, investment in skills and capacity support, even possibly tax incentives, could be additionally introduced to support progress in all these areas. The Made in Nigeria mantra has been heard before. What has been lacking is a more comprehensive ecosystem that facilitates economic growth in a way that is sustainable, albeit that we know that maximizing local value add and encouraging Nigerian players in a protected market does play a major part, but that will not be enough. My conclusion: to support Made in Nigeria, Nigeria needs a trade and investment policy which would include pacts with countries like India, Saudi Arabia, Malaysia, Japan, countries that are not on the crosshairs of the ongoing global trade drama. Also deepening intra-African collaboration, especially with the more advanced and major economies like Kenya, Egypt, and South Africa. ExxonMobil is planning a $1.5 billion investment in deep water exploration and development, putting to rest the company's rumored planned exit from Nigeria. The Nigerian upstream regulator said the significant financial commitment, which will be implemented between the second quarter 2025 and 2027, focuses on revitalizing production in the Nigeria Usan deep water oil field. In a positive sign on Germany's economy, factory orders over the month, that is, contracts for goods made in Germany, rose 3.6% in March after reporting no growth in February, beating estimates of 1.3%. Germany's industrial orders also climbed 3.8% year over year in March, compared with the previous decline of 0.2%. Asian stocks were mostly higher in a tepid cheer to the possibility of de-escalation of tensions in the China-US trade situation. US stock futures were also higher, and the dollar and oil prices also pushed up. Oil rallied more than 3% in the previous session as the US and China agreed to start trade negotiations. Chinese authorities have announced a raft of stimulus measures, including interest rate cuts and a major liquidity injection, as Beijing steps up efforts to soften the economic damage caused by the trade war with the US. This came shortly after US and Chinese negotiators announced plans to meet in the weekend. China's central bank is lowering the borrowing cost of its 7-day reverse repurchase agreements, its benchmark interest rate, by 10 basis points to 1.4% effective May 8. Well, that's all on this special edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.